And here we are broadcasting on our TGIF TGIT edition of the Real Estate Show. As you can see from the rolling hills in the background here, from the suburbs of Gatlinburg, Tennessee, near Pigeon Forge, where we had a great time during the week. And so because of some of our tours and trips and activities, we actually put in a tape and did a rebroadcast on Wednesday for our midweek report. So I want to fill in a little bit here what's going on. As you heard some of it, I talked about as we recapped Tuesday, which was a live show, very good show, worth listening to. And if you want to know where to go to listen to the shows, then you have two choices. One is if you're one of our Facebook audience, you can go ahead here on Facebook, just go down to the previous shows and you'll see the previous in chronological order. Go to the Tuesday, you'll see that was Ask the Foreclosure Man as our guest there when you're talking about property taxes in light of the foreclosures, which, as I mentioned, haven't really started yet. As long as these moratoriums, which expired, keep in mind, the federal mandate expired on July 31st. That means that we're about 1 month. They couldn't come together on any kind of a stimulus extension package here for the foreclosure moratorium. However, that being said, many of the states individually extended, including Florida, for example, which extended it to September 1st. California extended it to October 1st. And you got to check your states, because whether you're protected by this a foreclosure moratorium, which would basically stop the action in your local court system. Now, I'll tell you this, how many of you knew that you can actually get foreclosed and the process can take place in another state? Banks are going to be on to this. So like I said, stay on top of it. If you're in that situation, if you have a question, the guy to ask theforeclosureman.com. And you can get all of your questions answered there. Whatever they don't know, they know exactly where to go to get you an answer within 24 hours. So there is that limbo period that we're in right now, whether your state is observing a moratorium on a state level. Many of the states have allowed the foreclosure moratorium to lapse, and are leaving it at the discretion of the judges. And a lot of judges, of course, may or may not be very lenient. We have parallel to that situation, the eviction moratorium. Now, from what I understand now, is that some states, they extended the foreclosure moratorium, but not the eviction moratorium. So that means there's going to be a lot of activity going on in the courthouse. And so depending on where you're at, if you're on the landlord side of that coin, if you're on the tenant side of that coin, if you have any questions, feel free to give us a call, because we'll be happy to talk to you about that and what you might do, particularly in the states that I told you about. But here was an interesting article that was just published. And and this is talking about the improvement in the coronavirus mortgage bailout, but the improvement to the remedies have stalled in Congress, right? And they all went home. They said they weren't going to go home. They went home. And so while they're sitting at home enjoying their summertime, a lot of Americans are sitting on the edge of their seats wondering what's going to happen. And as more and more borrowers struggle to make payments. Now, very interesting. One of my property managers sent me over a list of resources for landlords. And what you might start to see that on a state-by-state basis, there are programs now, they're taking some of that money, some of the CARES Act money, the states are distributing it down to the county level. And at the county level, they're distributing it out to tenants who display hardship, to landlords who are going through hardship because of tenants that aren't paying. And I was looking at one of those programs earlier today for the Florida market, and I was seeing that here's the interesting catch. So remember I said before that communication is really the most important thing. If you're a tenant having a hard time, communicate with your landlord. If you're a landlord and you're trying to reach out to your tenant and they don't answer, number one is that they're only going to have one choice, which is to go ahead and file for the eviction. Number two is that the program, for example, requires cooperation from both sides. The tenant, they're going to have to display and show hardship that they were, because of the coronavirus, either displaced from work, reduced hours, reduced pay, something that, what's the hardship? Why is the tenant not paying? No proof of hardship, either start paying or start packing is really what the message is. If you're a landlord and you've got a tenant that's not communicating with you, because in order for the tenants to get assistance, they're going to need an agreement for the subsidy from the government. In other words, they may have to take a discount, but no landlord is going to want to give a discount to somebody that's not even communicating, let alone they're not going to be able to get the paperwork together. So big message here is communicate. So as of August 25th, a couple days ago, 3.9 million homeowners were in mortgage forbearance programs. And that's according to Black Knight, a mortgage technology and analytics firm. That represents 7.4% of all mortgages active out there. And it's unchanged from last week. So you've got a significant amount of properties in forbearance. A reduction of 23,000 borrowers in Fannie Mae and Freddie Mac forbearances was almost entirely offset by a 10,000 borrower increase in FHA forbearances and a 12,000 person increase among bank held and private label loans. So we went down 23 and up 22. We're basically back in the same place where we started. So the improvement in coronavirus bailout requests, the forbearance, basically stalled and was stagnant for another year. And after improving very well in July, August seems like it's right back to where it was. The number of borrowers struggling to make their monthly mortgage payments has essentially flatlined. That's good news, I guess, if you were worried about things getting worse, but it now threatens to move higher, is what the indicators are saying, that those 3.9 million homeowners were a mortgage forbearance program. That represents the 7.4 that I was talking about. More concerning, though, is that close to 3/4 of those in forbearance have had their terms extended from the initial 3-month period. So that suggests that their financial situations aren't improving, and here's where I want to caution you that, if 3 months, at the end of 3 months, they would have said, well, we want those 3 months plus the 4th month, which is due now. As we get more backlog in payments, the longer they're going to have to spread out the payments. But make no mistake, a payback is going to happen, and a payback is going to be due. So that's something to keep in mind there. So another survey from the Mortgage Bankers Association also showed the rate of improvement. In other words, less people or more people coming off of the forbearance is slowing down. And that's because I think we're kind of seeing a sort of a leveling off of the V recovery. And I think a lot of people are literally holding their breath to see what's going to happen with the elections. And I think that's where you're going to see the most pronounced change one way or the other. Plus, once the elections happen, then somebody's going to have to bite the bitter pill. And in order for us to move forward, we're going to have to bring the economy back into reality. Artificially suspending payments is a short-term Band-Aid, but not a long-term solution. So in the article, it goes on to say the extremely high rate of initial claims for unemployment insurance and the high level of unemployment remains a concern, obviously, right? No paycheck, no mortgage payment. Those are all indications of challenges that many households are facing right now. And while new forbearance requests remain low, and that's a good thing, the chief economist for the Mortgage Bankers Association said that the new requests remain low, particularly for Fannie Mae and Freddie Mac loans. The pace of exits from forbearance has declined. So that's the rate, the pace. Borrowers in the government bailout are not required to remit payments immediately after existing forbearance. Instead, those payments are made when the loan is either refinanced or sold. Interesting, right? That's for government bailouts. They will, once they get out of forbearance, those payments can be made when the loan is either refinanced or sold. The mortgage bailout under the CARES Act allows borrowers to delay monthly payments for up to a year on government-backed loans. Banks and private label securities have largely offered about 6 months forbearance, right? They want to get back to business as soon as possible, but it's unclear whether they will or how long they will extend that. So I could break that down a little bit more by type, but I wanted to talk about something else, which was the tax implications. See how it all kind of dovetails back in to our conversation at the beginning of the week talking about property taxes. But what might not have been well understood is that when you don't pay your taxes, the IRS looks at the forgiveness of debt the same as if you got a check or the income. So there could be tax implications for these non-payments. So this is what you should know. The CARES Act provided for some relief for homeowners with distressed finances, including mortgage forbearance and the moratorium against foreclosures on borrowers with federally backed mortgages. I want to emphasize that. If you do not have a Fannie Mae, Freddie Mac, Ginnie Mae loan, that protection is not for you. Federal Housing Finance Agency said on Thursday that Fannie Mae and Freddie Mac will extend its foreclosure moratoriums at least until December 31st. Remember, I told you, not till after the elections. Those protections were supposed to expire on August 31st, but the government agencies can do what they want. And on their particular mortgages, they said till December 31st, which I think is fairly realistic in terms of the assistance needed. You know, that pandemic isn't going away anytime quick. However, we have to keep the landlords in mind, and we have to keep the tenants what the tenants do. Remember my conversation about 2 weeks ago that tenants, once they reach a period of not paying for more than 3 months, the equivalent of first, last, and security, guess what? At the fourth month, it's 6 of one, half a dozen of the other, whether they even should pay back the back amount. That means that the landlord gets left holding the bag, and they're going to have to pay the banks back 12 months worth of payments missed, with who knows when they get a new tenant in there that starts paying. So that's one of the issues that I think Washington is not paying attention to. But there's greater economic uncertainty that can raise the foreclosure risk, which comes with tax implications for homeowners. For example, they could find themselves a very terrifying prospect next year, foreclosure, right? The Pandemic Relief Act that came as a law this spring sought to keep millions of Americans in their homes. In particular, what it did was it gave the federally backed mortgages, and I can't emphasize this enough, the ability to pause or request a pause in payments, what they call forbearance, for up to 180 days if they were facing financial hardship. Now, up until now, the banks have not been asking for proof of hardship. Expect that to change. Again, probably in the next couple of months, if not certainly right after the election. Whoever the next president is going to be is going to have to bring this ship back under control and put us back on a track. So we'll talk more about that in the coming days on our show when we come back. But the music is in. That means it's time for me to go out. It's time for me to wish you guys a very happy weekend. And from here, from the valleys of Tennessee, I'll be back in Florida for our next show. So until then, drive safe, wash those hands, and make it a great day. It's Eric Willner signing off, and God bless America. Thanks. You do the same. And that wraps it up there. Let's go back over here and slowly sign off. As you can see, the sun went down during our show here on the Facebook page. And first of all, thanks and for listening. And hey, to all of you out there on YouTube, good night. And now I'll switch over here to